Most people think investing is something you do once a year. You wait for a bonus, save a lump sum, then try to invest at the right time. It feels logical, but this habit quietly works against you. The truth is, investing monthly is one of the simplest ways to grow wealth steadily, safely, and with far less stress than yearly investing. When you invest yearly, you are betting everything on timing. You're hoping the market is low at that exact moment. But markets don't care about your calendar. Some years you invest at a peak, and your money sits flat or even drops. Other years you miss great opportunities because you were waiting for that one big investment moment. Monthly investing removes this guessing game completely. By investing every month, you naturally buy assets at different prices. Some months the market is high, some months it's low, and some months it's somewhere in between. Over time, this balances out your average buying price. This strategy is known as discipline, not luck. You don't need to predict crashes or rallies. You simply stay consistent, and consistency beats intelligence in investing more often than people like to admit. Monthly investing also matches how most people earn money. Salaries, business income, freelancing payments, they usually come monthly, not yearly. Waiting an entire year to invest means your money sits idle, losing value to inflation. Every month you delay, prices rise while your cash stays still. Investing monthly puts your money to work as soon as it arrives, instead of letting it slowly lose purchasing power. There's also a psychological advantage that people rarely talk about. Yearly investing feels heavy. It feels risky. You're putting in a large amount at once, and that creates fear. Fear leads to hesitation, overthinking, and often no action at all. Monthly investing feels lighter. The amount is smaller, manageable, and emotionally easier. Because it feels easy, you stick with it longer, and long-term commitment is what actually builds wealth. Another reason monthly investing wins is compounding time. Money invested earlier gets more time to grow. When you wait a full year, you're sacrificing months of potential growth. Even small monthly amounts can outperform large yearly investments over time simply because they start compounding sooner. Time in the market matters far more than timing the market. Monthly investing also protects you from your own emotions. Humans are emotional creatures. We panic when markets fall and get greedy when markets rise. Yearly investors often stop investing during bad years, exactly when they should invest the most. Monthly investing turns investing into a habit, not a decision. You invest whether the news is good or bad. This automatic behavior protects you from emotional mistakes that destroy long-term returns. For beginners especially, monthly investing builds confidence. You learn how markets move in real time. You experience ups and downs in smaller doses, which makes you stronger and more patient. Over time, investing becomes normal, like paying a bill or buying groceries. That mindset shift is powerful because wealth is built through routine, not excitement. Some people argue that yearly investing works if you're disciplined, but discipline is rare, especially under pressure. Monthly investing is discipline built into the system. You don't rely on motivation, you rely on structure. And structure always wins. At the end of the day, investing monthly isn't about being smarter than others. It's about being consistent when others are emotional, patient when others are impatient, and calm when others panic. Wealth doesn't come from one perfect investment. It comes from hundreds of small, boring decisions done repeatedly over time. If you want investing to actually fit into real life with salaries, responsibilities, and uncertainty, monthly investing isn't just better, it's necessary.